Hi, this is the PIM Trader. Let's review what happened in the market last week. We will start with the S&P 500, the SPY. Last week we drew an upward trend line and a downward trend line to see what the market was telling us. We believed that by the end of this past week or early next week, we would see some kind of reaction from the market, letting us know where it stood. On Monday, it fell below the upward trend line, almost indicating that the market wanted to go further down to retest the last low. Then on Tuesday and the rest of the week, the market continued going higher. By Friday, it broke above the downward trend line, indicating that the market wanted to move higher. We did draw a upward trend line using the last lows, but they weren't definitive. On Monday, the market fell below and recovered. It set a new low. It is a higher low. So if we redraw the upward trend line, we see the intersection of the upward and downward trend lines further out. And on Thursday, it ended slightly above the upward trend line, and on Friday opened at the upward trend line and finished above. It is now slightly above the previous low before the market sell-off. So now that we have a higher low, we expect to see the market go up a little bit or maybe go sideways and then fall below a bit. And what we would like to see is when the price does fall, if it does fall, to form a higher low than the one that was just set on Monday. As we get higher new lows, this is a sign of strength that the market wants to go bullish. In addition to seeing higher new lows, we want to see the price stay above the previous low from March 13th. The price is still under the 50-day moving average. We want to see the price get above that. The price is still below the 200-day moving average, so we also want to see that. The parabolic SAR dot is below the price, and it has been there for over 2 weeks now, which is a good sign. On the weekly view, the parabolic SAR dot is still above the price. As the parabolic SAR dot gets closer to the price, the greater the chance that the price will start having more upward momentum. Again, just to recap what parabolic SAR dot could be used for: when the dot is above the price, it acts as resistance, and when it's below the price, it acts as support. So on the weekly chart, the price is been in the Ichimoku green cloud for a few weeks now. We want to see the price get above that as well. On the daily, price is still below the cloud. What I'm anticipating happening is the price will move upward/sideways for a while, kind of at a 30-degree angle, and try to cross above the Ichimoku cloud on this really thin part right here. That would be the least resistance. The thicker the cloud, the harder the stock has to move and work to get out of the cloud. The cloud right above it is much thinner than the one to the right of it, so that could work as well. My conclusion for the S&P 500, if the price can stay above the previous low from May 13th and stay above there for a few days, that's a very strong sign. And since we set a new higher low, the likelihood of another bull run forming right now is very high, or medium likelihood. So if you didn't buy when the market bounced off the low on April 7th, or if you didn't buy this Monday, there's still plenty of chance to get in, assuming the price does stay above the downward trend line, and better if the price stays above the last low from March 13th. Next is the NASDAQ 100, the QQQ. Similar to what we discussed in the S&P 500, we had drawn the upward and downward trend lines, and on Monday it opened below the downward trend line. Since then, starting Wednesday, the price recovered and has been straddling the downward trend line and has broken above the downward trend line as well. This is a very good sign of strength and has definitively closed above the last low of March 13th. Since on Monday the price did form a higher low and we redraw the upward trend line, we can see the price never left the downward trend line, stayed inside the wedge of the upward and downward trend line, and broke above it on Thursday. So this is a very good sign of strength. the price is approaching the 50-day moving average. It's very close. The 200 moving average is a little further away. The parabolic SAR dot is still below and has been below the price for a couple weeks now. On the weekly chart, the parabolic SAR dot is still above the current price, but it's much closer than it was for the S&P 500. The price has poked its head above the Ichimoku cloud on the weekly chart, and on the daily, it looks like the price is starting to gravitate sideways, upward sideways, toward the thinner parts of the Ichimoku cloud. So in summary, the NASDAQ 100 is looking much stronger than the S&P 500. The stronger the NASDAQ 100 looks, the more likelihood the market is bullish, because the growth names tend to move the best when the market is in a bull market. So if we see the price hold above the last low of March 13th for a couple more days and gets above the 50-day moving average, this is a really good sign of strength. Next is the Dow Jones Industrial Average, the DIA. I've gone ahead and redrawn the upward trend line from last week's video and kept the same downward trend line. As you can see, the price is still inside the wedge. It has not broken above the last low of March 13th. It did, however, set a new higher low on Monday. The Dow Jones is typically a slower moving index. It's more defensive than the S&P and the NASDAQ. This one is going to move more slowly. We probably won't see much price action until maybe early May to mid-May, based on where the trend lines are intersecting. So for more conservative investors, as long as the price continues moving upward and stay inside these trend lines, inside the wedge, it's still looking pretty good. We want to see the price get above the last low from March 13th. Based on where the 50-day moving average is sloping, it looks like it could intersect the downward trend line in mid-May. So we want to see the price also get above the 50-day moving average. The price is way below the 200-day moving average. That will be the next hurdle to clear, but as long as it can get above the 50-day moving average, that should be a good sign. The parabolic SAR dot continues to be under the price, which is a good sign, meaning that there's support there. Based on the weekly chart, the parabolic SAR dot is above the price, meaning there's still quite a ways to go before this one looks more bullish. On the weekly, the price is still inside the Ichimoku cloud, about halfway through it, and on the daily, it is pretty far away from it. Based on the angle of where the price is moving, it will probably try to get through it on the thinner part of the cloud. Next, let's review the S&P MidCap 400, the MDY. If we look at the downward and upward trend lines from last week's video, we see the price stayed below the upward trend line, but stayed really closely to it. And now that we know we've set a new higher low on Monday, we redraw the upward trend line and we see the price has stayed within the wedge and is trying to get above the last low from March 13th. This is a good sign for the mid caps. It has been in a very long downward trend even since before this year. Hopefully we start seeing these recover. So what we expect to happen in the coming weeks for good price action, the price should get above and stay above the last low from March 13th. Since the 50-day moving average line is getting close, we would like to see the price get above it and stay above it. The 200-day moving average is pretty far away. We don't expect to see the price getting above that for a long while. The parabolic SAR dot has been under the price for over a week now, which is good. On the weekly, the parabolic SAR dot is very close to the price. I wouldn't be surprised if this coming week or the following one, the price gets above the parabolic SAR dot, moving it below. Once the parabolic SAR dot is below the price, this acts as support, meaning there's a higher likelihood that the price will continue moving upward. The price is still below or at the very bottom of the Ichimoku cloud on the weekly chart, and it's not close to it on the daily. based on the direction. I expect to see it try to get through the cloud on the thinner part. So in conclusion, the mid caps are looking pretty good. They are still inside the wedge. They still have a little more work to do, but it is getting close to the last low of March 13th and possibly getting above the 50-day moving average, soon breaking the downtrend since December. Next is the Russell 2000, the IWM. Based on the upward and downward trend lines from last week, very similar story as the rest of them, mainly closer to the mid caps. The price did straddle the bottom of the upward trend line, and if we redraw the upward trend line based on Monday's new higher low, we see the price inside the wedge and it's trying to get out of it. It is still a little close to the low from March 13th. The 50-day moving average line is getting close. The 200-day moving average is still pretty far away. The parabolic SAR dot is below the price, which is good. On the weekly, the dot is very close to the price, so very similar to the mid caps. When the price gets above the parabolic SAR dot, the dot will move below the price, acting as support and giving us more likelihood of upward movement. The price is actually below the Ichimoku cloud, and if it keeps moving in the current price direction, it'll stay below it for a while on the weekly chart. On the daily chart, it looks like based on the current price direction, it will try to get through the cloud on the thinner part. So in conclusion, what we need to see happen is price get above the downward trend line, next get above the low from March 13th, and also get above the 50-day moving average. If those three things happen, then the small caps are showing a change of behavior and breaking the downward trend since last year. Next is gold, the GLD. We have been mentioning for weeks how strong gold was, and last week we mentioned that the price had entered the hold zone. If you didn't buy in the buy zone or even the chase zone, to stay away from the hold zone. If you buy in the hold zone, you have a chance of the price dropping on you because it's moved so high. As you can see, on Tuesday the price fell, big red candle, and ended lower in the week. So it started with a gap up and fell below. We don't know if it's going to keep going downward or if it's going to go upward, but this is just a reminder that once you're in the hold zone, it could reverse and fall back down. If the price has moved too fast, which if you look at it, it did move very quickly, it needs time to absorb the gains. So sometimes the price will fall below because some investors see, oh, the price is very high, I'm going to lock in some gains. If enough people sell, then the price starts moving downward. So again, there are no new buy opportunities right now for gold. It's best to wait until there's a new buy opportunity. Next is silver, the SLV. As you can see, the price is still in the buy zone. It did fall a bit. It is holding the 50-day moving average. The price is on the lower end of the buy zone. So if you have not bought yet, I would recommend waiting a little bit to see if the price starts going sideways or starts to recover. If the price falls below the 50-day moving average, I would wait just a little bit to make sure it can recover and get right back above. It's still looking pretty good. The 50-day moving average line is still moving upward and the price is still above it. The 200-day moving average is pretty far off and still sloping upward, showing a good long-term outlook. And the parabolic SAR dot is below the price. It's still a ways away, which is a good. The closer the dot gets to the price, the more likely that the price and the SAR dot will change directions. On the weekly chart, the parabolic SAR dot, the peak of last week, is getting close to the dot. So it's possible that the price will have a good move and reach the dot where it will be next week on the weekly chart, or the silver price will go sideways just a little bit or move up slowly for the next few weeks, giving the dot a chance to fall further down. It's hard to say, but since the dot is above the price, meaning it is acting as resistance, So another way to think about buying in the buy zone is to wait till the price reaches the SAR dot and the dot falls below the price, meaning that the parabolic SAR dot is acting as support and now it's time to buy. So on the list is Berkshire Hathaway, the BRK.B. Last week we mentioned the price was still in the hold zone, but now near the bottom of it, and we identified that since the price was still below the last high, for more aggressive investors, if you saw a bounce as an opportunity to buy, you could. For those of you that did that, it worked out well because the price fell below the hold zone into the chase zone on Monday, and then it bounced off the 50-day moving average. Since the chase zone is a valid buy, and the bounce on Tuesday off the 50-day is also another valid buy signal. If you bought on either of those 2 days, you've now have a profit because it went back up into the hold zone. For those of you that are holding, it's still prudent to hold. Price is still moving upward. That's it for this week. This is the Pim Trader.